Welcome back to the channel and welcome back to another weekly price action review. Now, full transparency, this is the second take because I realized after about 20 minutes in that my microphone wasn't picking up any sound. So that was a bit of an interesting moment, but it looks like we've got sound now. I can see that being measured, so hopefully you can hear me. So I'm going to try and just touch on the things that I discussed and we'll get straight into this. But as I said previously when I recorded this, the annotations and some of my notation have already been made, so I've already done that. However, I'm going to go over what I noted down. I didn't have enough time yesterday to actually do the recording aspect of this or to record as I was going, so I decided to do that side of things earlier, so I've got that down, and then now I'm going to do the recording and the voiceover for you guys as part of the channel, and for you guys to take away any key aspects that you find interesting. So let's start on the weekly time frame, and we'll get straight into this. So following the previous week, so this week here, I was personally anticipating a continuation of lower prices to purge this old low weekly. And the reason for that is because obviously we saw this close below this old low weekly here on a closing basis with this large rejection at the top, bearish candle. So I was assuming or anticipating a continuation of lower prices. However, it is also important to note that at the close of this candle here, we did have potential high time frame SMT relative to this cycle, yearly cycle, if you will, forming at the lows. So I had to be cognizant of that fact, that if that was confirmed, then we could potentially see higher prices in alignment with the macro institutional order flow. Okay, so now personally I don't trade the cycle. However, I would use that as a confluence to determine where is the likely draw on liquidity, and then I would utilize some of the lower high time frames to formulate a trading idea and a trading model to then participate in the move. So I was looking to see whether this low would be confirmed as a potential high time frame order flow switch to seek bullish price action. And for anyone who's looking at their charts and thinking, oh, hang on a second, that there is an SMT at the lows. Well, it depends on how you set up your charts. I use adjustment, and if you look at YM lower low here, and if you look at ES higher high and higher high here, so that was the SMT at the lows relative to the weekly time frame. So anyway, let's continue. So ultimately, this low was confirmed because we can see the bullish price action, and I will discuss that on the daily and the H4 time frame. And the market displaced higher, supported by the high impact news events of the week, which was CPI. So ultimately, price closed above this candle's opening price here. So we have potential weekly order block, bullish order block heading into the following weeks, which could be used as a key price level to create the narrative or the context of price to continue higher. Now, I don't use order blocks, so it won't be something that I will refer back to, but it could well be something that many of you guys do. So that's just something to note heading into the following week. So yeah, we ultimately had this bullish price action, and there was a number of confluences to support that. So dropping down to the daily time frame, let's get into this one. Okay, so let's just have a look at some of the key things annotated here. So this candle was important here. I'm not going to really go into delve too much into this, because the confluence actually for this SMT at the lows was really, this was the sort of cherry on top, if you will, the confirmation of this candle via this one closing above, but there were some confluences on the 4-hour time frame supporting the confirmation and validation of this SMT at the lows. But we'll touch on some stuff. We had obviously this old high daily here relative to ES and NQ. this SIBI and balance price range or BPR above here, and then obviously the previous weekly high. Now, I'm utilizing this range. Why am I utilizing this range? Because this SIBI, BPR, if you will, we can see reaccumulation of shorts taking place here. So reprice and rebalancing of this SIBI. Market displaces lower, takes out this low. So therefore I'm utilizing this range. That is a key swing point, key swing high to this low. That's my dealing range. Some can use this one here. I'm utilizing this because ultimately this one here purged this high, so you could utilize that, but this was the high that was responsible for purging this low, so this is the high that I believe would be the draw on liquidity once we had the high time frame order flow switch. So following the weekly commentary, I noted how Monday the market traded lower towards the old low weekly, which is what I was anticipating, but failed to purge that level on both ES and NQ. Okay. Excuse me. Whilst that key price level was purged on YM. So this set the stage for a change in institutional order flow and potentially this SMT being confirmed. So furthermore, I noted this Monday candle. Okay. Significance of that Monday candle, but ultimately confirmed by Tuesday's candle closing above, creating this PSP daily candle, and that was another confluence to support potential higher prices. Okay, so this candle was confirmed on Tuesday. Yes, it's an indecision candle, but nonetheless it's closed above. So that in itself has pretty much confirmed this high time frame SMT. However, we'll look at the 4 hour because I believe that the confirmations came sooner. Okay. So once this is confirmed, the anticipation is that at a minimum we are going to trade above into a premium of this range at a minimum. Okay. However, it is important to note as an additional confluence, if you want the cherry on top, if you will, is that this bullish price action is not fully established until we see the violation of a premium imbalance. It had to be purged on a closing basis. So this occurred on Wednesday on this CPI candle, where obviously assisted by CPI, where the market aggressively displaced higher, purging this SIBI here and also this SIBI here. So that confirmed that the likely continuation of higher prices for the remainder of the week, in my opinion. Okay. Now, yes, that is what printed, but they're the things that I'd have been looking for, right? And then ultimately the market continued higher, traded up into this SIBI daily / BPR, where we saw this slight retracement to close the week. Furthermore, the market did create this BISI here, which was unfilled. Now, naturally, because of this third candle here, we would have anticipated a potential trade down into this BISI before continuation higher, but the market had left that unfilled, supporting the idea that the market is incredibly strong right now and wanting to seek higher prices. Okay, so there were some things to ultimately take away there. But with the confirmation of this SMT via Monday and Tuesday's price action, that gave confidence that we're likely to see a bullish CPI. So let's drop down to the 4 hour. Got a lot more going on here on the 4 hour. Okay, and you'll see that there wasn't really much for me to sort of get my teeth stuck into here. So following on from the daily time frame, we have a bit of coffee. Interestingly, I haven't got the. Oh yeah, I have. Okay, so following the confirmation of the high time frame SMT at the lows, which was noted by the market initially inverting this SIBI here. Okay, so remember what I always say about inversion fair value gaps. I don't utilize them in terms of engaging in a trade. I utilize them as a potential confluence or a confluence to essentially confirm, or a strong confluence to support the idea that we are going in a certain direction following SMT. It's not displacement. It's just this is a PD array, opposing PD array, which has been violated. So now you need to take notice that we are potentially going in that direction. However, I need to see other confluences to support that. Okay, so the market inverted that SIBI, which became a IFG, and I've marked the IFG just purely for the purpose of highlighting that, and more importantly, confirming the bullish order block H4 set the stage for near-term bullish price action. But also as important as this bullish order block here is this BISI here, this displacement, this imbalance that formed, that confirmed the likelihood of higher prices. Once you had those two things, the displacement, then the confirmation of the bullish order block. Now we could have utilized this extreme order block here, that would have been fine, but I decided to utilize here because that candle wasn't confirmed yet. So that was my bullish order block, displacement, confirmation. Okay. And you could argue there was a small BPR in here as well, which again just adds to the confluences to support higher prices. So the market confirmed here the true week open before repricing lower into the lower of the BISI H4s and into the extreme down close candle of the bullish order block H4. Okay, before we saw this rejection and repricing higher. Now it's important to note here that when the market repriced lower, okay, during Tuesday's price action here, the bodies of the candles did not violate CE. Yeah. Of the upper BISI. So that is confirming strength, that the market is strong. Okay. So heading into Wednesday, following this high time frame SMT, which was confirmed on the H4 time frame by the BISI, and the violation of the SIBI and the confirmation of the H4 bullish order block, the market consolidated before displacing aggressively higher, purging the previous day's high. And we anticipated this bullishness for CPI on the basis of these confluences that occurred down here. The market wanted to get into a consolidation prior to CPI, as it typically would do, and then we have this displacement higher. So as I said, we purged the previous day's high, we purged the old high daily, all on closing basis. And ultimately, we leave this large BISI once we have this confirmation of this next candle here. Excuse me. And that in itself is supporting the continuation of higher prices. So we've had a number of 4-hour bullish imbalances form, and the market respecting them all. Therefore, that is signifying the unlikelihood of seeing a reversal, but more the continuation to the high that originally created the dealing range, which is the previous weekly high. Okay, so then we know that the market reprices lower towards here, towards the BISI H4, where I wanted to see a high time frame crack and correlation with NQ. That's, to support a potential trade idea to see higher prices. That's what I wanted to see. I wanted to see that happen during the New York session, the AM session. was what I wanted. But if you look at the time, it happened during the PM session. In actual fact, it was even slightly a little bit later, because if you think that this candle is 2 till 6, so it happened later, and so this did occur. However, it was outside my trading window for me to get involved in this potential model. And it set the stage for higher prices heading into Friday. Now, this is where, well, when we get down to the hourly, you'll see, where I missed the trade, but I've noted that down as a takeaway for the week. So the market then displaced higher as anticipated heading into Friday, purging the previous day's high, which would have been the high time frame draw for that day, on a closing basis, and trading up into the CB, daily, and the BPR before a small retracement back into the daily range to close the week. The market did not provide many opportunities, certainly opportunities that were presented to me during the times of me being in front of the charts, which is true. Okay, so very clear kind of narrative, a little bit tricky to identify whilst down here, but once we've seen the confirmation of this, then and this forming below the true week open and various other things, that's where we're looking for higher prices now. We're looking for higher prices. Now, one could say if we had a cracking correlation at the highs here above the true week open, we could look for shorts. Yes, we could look for a near-term short to low-hanging fruit objectives, because we have seen since the violation of the CB daily, because of the CPI candle here, that the daily time frame has flipped bullish, and obviously by the close of the week, the weekly time frame technically has, but ultimately the daily has. Therefore, we want to, if we're going to trade counter trend, we only want to take it. I only want to take a specific model. All the other models are out the table. There's only one specific model, potentially two specific models that I can take, and it's to low hanging fruit objectives and then out. We want to take what the market gives us. We don't want to hang around, especially when it's counter. Okay, so 4 hour, that there was what I was looking for. It occurred outside. However, this can lead to another opportunity which occurred on Friday, which was the one that ultimately would have been lovely to have taken if I was in front of the charts. But let's drop down to the hourly and have a look. So let's get this screen correctly. So we've got Monday there. Okay, I think that looks pretty good. Okay. So I'd like to more. There we go. Okay, perfect. All right, let's go. Okay, so as we know, Monday's a day where I do not trade. I do not trade the markets, but I prefer to see Monday print confirm specific key price levels before looking to formulate trade ideas for the week. And ultimately, the market formed the high time frame SMT at the lows. With YM before displacing higher. So here's Monday. Confirms, well, I say it confirms that. We create that. The market ultimately displaces higher. Let's just change these so we can see the sessions for trades higher during New York and into the PM session. Ultimately confirming the bullish order block H4 with supporting H1 confluences. So we could say here this BISI here, but we already had the confluences from the H4 time frame, so the H1 confluences were not necessary. Okay, and this set the stage for higher prices on the week and also the likely direction for CPI. Okay, so then we head into Tuesday, right here. We're here. So following Monday's price action, I was anticipating a continuation of higher prices. Following, obviously, the confirmation of the higher time frame SMT. Yeah, I wanted to see potentially a couple of models, one of which would have been slightly more aggressive for the market to trade down below this previous day's low here. Probably get rid of that. To this old low daily, cracking correlation, seek higher prices. That was unlikely. But I wanted to see a low time frame model potentially form in here to see higher prices, and that didn't occur. We had symmetrical price action. The market opened, repriced higher above this old high, H4. Right there, before trading back down into the BISI H4. Bear with me 1 second. Bless me. So then, during the high impact news, which would have been PPI, the market then range higher to purge the BSL London, so London high of the day, and that set the high of the ultimate. That set the high of the day. Okay, before the market traded down, could even argue displaced down, but because we do have an imbalance here, displaced down, purging the SSL H1 and into the H4 order block. Now that could have been a trade in itself, but because I don't trade overnight and all of that sort of stuff, that wouldn't be the case. But ultimately traded down into the bullish order block and further down into the BISI H4, setting the low of the day, before rejecting back into the daily range, pricing higher back into the daily range, and consolidating for the remainder of the day. So ultimately, the market during this day didn't deliver either of my game plans, so it was a no trade day. Simple as that. Okay. So we head into Wednesday, which is again a day that I typically don't trade. Did present an opportunity here nonetheless, but I wasn't there for that. So the market continued. So if we look at this consolidation here, looking at that, continued into Wednesday, which is typical in the lead up to a high impact or a central bank manipulated high impact news driver, if you will. So it continued the consolidation from the AR session, and then we see the market just trade down and purge the low, of the Asia range. Okay. And that ultimately set the low of the day. Before we started to see this reprice higher, displacement, if you will, because there's a fair value gap in there. The market then aggressively expanded higher following CPI numbers and traded and closed above this previous day's high and this old high daily. Okay, the market then repriced lower here, forming this low time frame SMT, which is a trade idea. It certainly is a trade idea. I think if I recall, it created that with YM, but I could be wrong. I think it was with YM. Yeah, before displacing higher to purge the buy side New York AM session high, and then ultimately setting the high of the day. Okay. So we're going to Thursday. So Thursday the market opens, displaces higher, as we can see. Displacement, fair value gap, displaces higher, purges the old high H4 slash previous day's high, setting the high of the day. Okay, so I wanted to see the potential possibility of a purge of the previous day's high and potentially a near-term trade down into this SIBI. That didn't occur. The market repriced lower, violating this BISI, creating an inversion fair value gap there, and converting this into an inversion fair value gap, forming that. Now there was a slight displacement here on ES, but that displacement was not seen on NQ, so therefore it wasn't aligned. So I wasn't really supporting lower prices, but the likelihood is if we had a cracking correlation, then I would look to want to see something. But as we were seeing this consolidated price action trending lower, it didn't represent high probability conditions as far as I'm concerned. So it continues to trend lower into the New York PM session, purging the New York AM low and that SSL H1, so taking out hourly liquidity pools before setting the low of the day and the second swing point to support this PDA SMT at this H4 BISI with NQ. So now this was high probability, but look at the time when it formed. It was already 4 o'clock. I'm not engaged in the market, and this is where I missed an opportunity. But again, I typically have responsibilities in the morning, so that's why I don't trade the London session, even though the London session I am present for, because I'm UK based. So if we head into Friday, following the confirmation of this PDA SMT, and following and what confirmed that typically would have been an M15 bullish order block, but because it's out of session now, the H1 order block was confirmed, and that is key, and that's strong, and that's indicating we've got confirming this SMT. Now we can use M15 confluences here, but we also have a BISI in here supporting bullish price action. Okay, so the market began to reprice higher during the Asian range, which we can see here, heading into this new day. Right, the market opened, repriced lower. Price low. So I was just trying to see where I am. Things look really tiny here to set the London low before displacing higher, leaving an aligned BISI. So when this displaced higher left this aligned BISI, this is where the opportunity presented itself. So we've now got the high time frame framework with this SMT, this model here that was unable to capitalize. That in itself gives the foundation for this low time frame model which occurred here. That's what I missed because it was during the London session and I wasn't privy to it, and by the time I came back to my chart it was past this 7 o'clock period, right? And so so the market formed again PDA SMT at this hourly BISI with NQ supporting the idea of higher prices to the next H4 inflection point in the form of the previous day's high. So that was the trade idea there, just that little bit in here. The market then displaced higher, purging the previous day's high and continuing higher into the SIBI daily and BPR to close the week. And that, my friends, ladies and gents, is the weekly price action review for this week and how I missed that trade. And it's a shame because ultimately you want to come into the session, formulate a trading idea. Now for me, predominantly this model here predominantly occurs after this high time frame variance of the model has occurred. So once we've seen the high time frame variance, then this one typically then becomes more likely. Now there are other models where this one can form, but typically this one seems to be the best, where this one then can occur afterwards. So yeah, that was the week in its entirety. A very interesting one, specifically with CPI. But hopefully you've taken something away from that. It is an interesting week. It was a shame missing that. I really wanted to try and capitalize on something during the week. Schedule wise wasn't great. A few commitments and stuff meant that I was away from the charts and I wasn't able to capitalize. But I'm still trying to improve, still learning, still developing, and so on. We have the back testing sessions as well, which are running concurrently with this. So it's all about the game of improving. You know, I'm setting aggressive targets for this year. Important aspect of that is going to be these weekly price action journals. So I encourage everybody to ensure that you're doing this on a daily and then you reanalyze on a weekly basis. And this is where you're going to leverage the biggest leaps in improvement in your trading journey. You're going to build so many different skill sets just from doing this, around patience, around discipline, around identifying of setups, about rule-based models, etc., etc. It's all going to occur from this. So hopefully you've enjoyed this episode. Hopefully you've taken something away. If you have, please give the video a like. I'd really appreciate that. And if you enjoy the content, the things, the messages that I am sharing with you guys as I continue through this journey, why not give the channel a like? I'd really appreciate that. It shows a level of support and that, you know, some of the things that I'm saying is resonating with some of you, and we'll see where this thing goes. But anyway, hopefully you've enjoyed it. Going to end this one here, and guys, I will catch you in the next one.